What is real economic zombie? What are zombies in financial terms? Let's look at the explanation given in Investopedia. Zombies are companies that earn just enough money to continue operating and servicing debt, but are unable to pay off their debt. Such companies, given that they just scrape by meeting overheads, wages, rent, interest payments on debt, for example, have no excess capital to invest to spur growth. Zombie companies are typically subject to higher borrowing costs and may be one just event, market disruption or a poor quarter performance, away from insolvency or a bailout. Zombies are especially dependent on banks for financing, which is fundamentally their life support. Zombie companies are also known as the living dead or zombie stocks. Nowadays, there are different zombies in the shape of risking the economy. The main area in which the above definition totally fits is government. The government is doing the same job, just accumulating the debt to finance its expenditure and having no plan to spur growth in the economy. The major loser in the case of rising interest rates is the government itself, because it has to borrow money at a high interest rate, which increases its cost of borrowing and has to pay a high sum of interest payments. These large amounts of interest payments are to blame for the massive budget deficit. On the other hand, if we look at the price-to-earnings ratios, PE ratio, of corporate sectors, it shows that share prices are undervalued. It shows that companies are performing well. The reason for the undervalued stock market is the government. The government is following the old dead rules on the monetary side to handle the economy. That is why the economy is not showing any positive signs that would signal investors to enter into the capital market. What these zombies should do is to leave these dead ideas of just increasing the interest rate every time to curb inflation. As a substitute, they must work on a research-based strategy and a more vigilant approach.